When you think of banking and you think of journalism and you think of people reporting and writing and analyzing it, it is really Tamal.
Tamal to me is the Michael Lewis of India.
Tamal has been the R.K. Lakshman of our sector.
Tamal Bandyopadhyay is without a doubt India's finest banking writer.
Tamal Bandyopadhyay by far one of India's most trusted and authoritative writers in banking and finance issues with a formidable reputation for professional integrity.
A prolific writer of the contemporary Indian banking issues.
He has also been playing a trailblazing role in Indian financial journalism.
Tamal calls a spade a spade. I think it is this trait that makes his book Pandemonium a book really worth reading.
And for anybody who is interested in India, this is essential reading, and there is nobody better than Tamal to tell this story.
To a student, it can be a textbook. To a public policy expert, to a banker, or to a researcher, an invaluable reference material. In that way, the book is completely unputdownable.
Pandemonium, the Indian banking tragedy, is a very difficult topic, but something that needed to be addressed. And Tamal has turned it into a thriller.
There can be no better chronicler than Tamal Bandyopadhyay, who is among India's finest financial journalists and a real guru when it comes to banking journalism in India.
Good evening, good afternoon, good morning to all of our viewers, depending on where in the world you're logging in from. Now, on behalf of Roli Books, I would like to welcome you all to this very, very special virtual book launch of a much-awaited book, Pandemonium, Great Indian Banking Tragedy by Tamal Bandyopadhyay. In different circumstances, we would probably have been in a large conference hall in a Mumbai hotel, getting a chance to personally meet with Tamal and congratulating him on his latest and arguably his best book. However, 2020 has been anything but normal. It has made it impossible for us to congregate in large gatherings, but at the same time, it has given us something even more special, the ability to host such virtual events, making it possible for thousands of you to attend. We are no more confined to physical limitations, time zones, and logistical complications. Each one of you today can log in from wherever you are in the world, from the comforts of your home, your office, or even your commute. And due to this virtual format, we have the privilege of having speakers in today's launch from New York, Hyderabad, Mumbai, and New Delhi. It promises to be a truly special event. A little bit later, you will hear from illustrious and highly accomplished speakers. Dr. Subbarao giving the keynote address, followed by a discussion between Mr. Uday Kotak, Mr. Rajnish Kumar, and Dr. Acharya, all of whom need absolutely no introduction today. I would like to express my heartfelt gratitude to all of them for agreeing to being here today to launch this very special book. But before we hear from them, I would like to take just a few minutes to speak about the star of this evening's event, Tamal Bandyopadhyay. In the little time that I've gotten to know Tamalda, I have been left in complete awe. Not only is he deeply passionate about his craft, the depth and breadth of his domain knowledge is absolutely unparalleled. I admire the manner in which he is able to tackle complicated and often confusing facts and simplify it for the common man. Because let's face it, banking, loans, credit, money and equity markets impact each and every one of us. And Tamalda has this unique ability to drill it down to the basics for wide mass consumption. And another barometer of success is how you are viewed by your colleagues and peers. And once again, I have been amazed at the level of goodwill and support Tamalda received from across the industry. In the run-up to the publication of this book, we have gotten overwhelming support from the who's who of the Indian banking world, from policymakers to bankers, and from journalists to fund managers. All have endorsed the book solely based on the reputation and credibility of Tamalda. And this, to me, is truly remarkable. While we approached Tamal to write this book last year. Subconsciously, I think he has been working on this book for the last 2 decades. It covers a vast canvas and takes the reader on an extraordinary journey to explain in detail what ails Indian banking, the reasons for it, and the extraordinary events that took place. As I mentioned earlier, the most admirable part is that he is able to do this in an anecdotal and deeply engaging way. The book is not academic in nature, and neither is it full of dense financial jargon. It's told through a series of stories which immediately make it interesting to read. In the words of Mr. Uday Kotak, from who you'll be listening to later, it reads like a Shakespearean tale on Indian banking. And Mr. Rajiv Kumar, Vice Chairman of Niti Aayog, calls it a financial sector policy thriller. Such a magnum opus perhaps has never been attempted before. Only someone with the insight, access, credibility, along with an objective bird's eye view could have written it. And as his publishers, we are very excited to have brought it out. Today's book launch will start with a keynote speech by Dr. Subbarao, followed by a panel discussion between Mr. Uday Kotak, Mr. Rajnish Kumar, Dr. Acharya, and the author himself. The discussion will be moderated by Kumar Bagrodia. Kumar is the founder of NeuroLeap, India's leading applied neuroscience company using technology for better mental health. Often called India's brain enhancer, he focuses on neuroeconomics and high performance. Thank you so much, Kumar, and we look forward to an engaging conversation. Before we kickstart the proceedings and I hand over to Kumar, I would request all of our guests and panelists to officially launch the book by holding up a copy for all of you to see. That, ladies and gentlemen, is Pandemonium, the Great Indian Banking Tragedy. The book is available to buy from all good bookstores, as well as online and on Amazon and Flipkart. It is available also as an ebook on Kindle for all our overseas readers. Finally, on behalf of Roli Books, I would once again like to thank you all for logging in from wherever you have. Enjoy the discussion. Over to you, Kumar.
Thank you, Kapil. That's a great introduction and welcome. Welcome again to all our viewers and all our esteemed panelists and our keynote speaker, Dr. Subbarao. Without further ado, would request Subbarao to give his keynote address on the book and the topic for today.
Thank you very much. First of all, my thanks to Roli Books for inviting me to be part of this book launch event. It's an honor to which I attach a lot of value. And Tamal, many congratulations. You produced a wonderful book. Pandemonium, the Great Indian Banking Tragedy, has Tamal imprint all over it. It's comprehensive, thorough, insightful, incisive, and above all, a gripping read. As U.K. Sinha says in his endorsement of the book, Pandemonium reads reading Pandemonium is like binge watching an engrossing TV series. You can't stop until you're finished. I've known Tamal for many years. First, when I was in the Prime Minister's Economic Advisory Council, then as I moved to Ministry of Finance Secretary, and then of course as I moved to Mumbai as governor. In the years I've known Tamal, I've grown to respect him. He's by far one of the most trusted voices in India's financial journalism, with a formidable reputation as a knowledgeable, thoughtful, and above all, a fiercely independent columnist. In a democracy, the media is supposed to be adversarial. Tamal manages the impossible by being adversarial and friendly at the same time. On a personal note, I must add that I've learned a lot from my interactions with the media personnel, especially when I was governor. I don't mean by way of gaining bits of information or grapevine. I mean knowledge, insights, thoughts, ideas. Every time I did an interview with a media person, I learned a lot from her questions and from her. And Tamal interviewed me several times and I learned a lot from him. In fact, I remember the last time he interviewed me in Singapore on the rationale and fallout of demonetization 4 years ago. I watched the adaptation as Tamal evolved from being a columnist to an author. He's written several books already. But the book we're launching today, I Am the Great Indian Banking Tragedy, is different from all his
I think Dr. Subbarao is having some internet issues. We'll just wait for a few seconds. He's usually able to log back on. Okay, he's back again.
Am I still on?
Yes, sir. Yes, sir.
I'm sorry, I've got a very fickle connection. Okay, I'm sorry, I've got a fickle connection, but all Tamal's earlier books were on specific institutions, individual institutions. Whereas this book, Pandemonium, covers an entire sector. It covers virtually all the current issues in India's banking, NPS, bank consolidation, the implosion in the NBFC sector, RBI and other regulators, the insolvency and bankruptcy process, and it covers all the actors, the government, RBI and other regulators, financial sector participants, commercial bankers, investigative agencies, other watchdog institutions. I found Pandemonium to be a commendable book. In the time available to me, I want to mention 3 reasons why I found this to be commendable. The first reason I find Pandemonium to be a commendable read is because of the degree perspective on okay. Can I from where I was telling you the first reason why I found Pandemonium to be a commendable book is because Tamal gives you a 360-degree perspective on virtually all current issues in Indian banking. Take, for example, bank consolidation. In the 6 years that the Modi government has been in office, we've seen SBI subsidiaries merge with the parent bank. We've seen consolidation of several public sector banks. From 27 public sector banks in 2017, we today have 12, less than half. There raise several questions. Are bank mergers a good thing? Or are they a distraction from addressing more pressing issues? Do mergers solve a problem or do they create a problem? Is the way the government going about it approach? Who wins, who loses from bank mergers? And what's been our past experience? I found it intriguing that when the finance minister announced bank mergers in August last year, she pushed the idea on the argument.
Oh dear.
Okay, I was talking about bank consolidation. When the finance minister announced bank mergers in August last year, she pushed the idea on the argument that bank consolidation is an imperative for India to become a $5 trillion economy. We need to do many things, get many things right in order to become a $5 trillion economy, but it's not certain that bank consolidation is necessarily on the list of priorities. In fact, it can be argued on the contrary, that bank consolidation takes away the mind of the senior management, away from more pressing issues such as resolving bad loans or scouting for fresh lending opportunities. Yes, there were bank mergers. Kumar, do you want me to go on, or you want to
Let's
go on with the
continue.
show?
No, please continue. Let's try and see how far we can
continue. Okay.
Yes.
Sure. My apologies for this. There are many things we need to do. We've got to get many things right in order to reach a 5 trillion economy, but it's not clear that bank consolidation ranks on the list of priorities. There were bank mergers in the past, but they were not triggered by specific circumstances. This is the first time we're doing bank consolidation on the basis of a broad policy initiative. It's not unambiguously clear from our experience or even global experience is a net positive. Yes, organic mergers triggered or motivated by purely business considerations can be efficiency improving, but it's not clear that arranged marriages of the type the government is organizing
Dr. Subbarao, to conserve bandwidth, you could just deliver the talk with your audio on only. So if you switch off your mic, we might be able to conserve bandwidth.
Okay.
Sorry, if you switch off your camera. Yeah, there'll be a button to stop the camera. Just stop your camera and keep the mic on. Yes, and if you continue speaking now.
do that.
Yeah, it's off now. It's off.
Okay. It's off? Okay.
Yes. Now we can hear you.
Can you hear me still?
Yeah.
Yes, absolutely.
Hello? Okay. Okay, very good. So I was on the first reason why I believe Tamal's book is a commendable read. It gives you the arguments for and against every issue, gives you all the positives and negatives. So that's the first reason. The second reason I found Pandemonium to be a commendable read is because Tamal tells a dispassionate story without taking a position. He doesn't push a point of view.
Should we continue now? I guess Sir is having a real challenge with the internet at his place. Let's see if he's able to join in again.
I found that book Pandemonium to be commendable is because it tells the story dispassionately without doesn't push an opinion, doesn't give a point of his own point of view, rather lets reader make his own decision. In his preface to the book, Tamal talks about this 1950s Japanese movie, Rashomon, Akira Kurosawa's Rashomon. The central theme of Rashomon is the pursuit of truth. The plot is about the murder of a man and the rape of his wife. 4 different people recount 4 different versions of the story. There's nothing very unusual about it. There's nothing very unique about it. Kumar, this is not working. I think you should go on with the show.
Okay, sir. Okay, sir. But thank you so much for trying. And I think whatever you said is already very impactful and very insightful. But thank you, and thank you for trying hard, sir. Well, unfortunately, Dr. Subbarao has been having some challenge with his internet connectivity, but I think he was able to get through at least a good part of his talk. Let's continue with the panel. We've got a great panel with us. Tamal, starting with you as the author, this is your 6th book, and what is this whole effort of sort of trying to sensationalize the subject of banking and finance in India with the title Pandemonium? And what is it that you're trying to say? What is it that you're trying to achieve with this book and with this title?
Okay. Thanks, Kumar.
Yes,
I'm audible. Yeah. Pandemonium. Actually, I picked up the word from John Milton's Paradise Lost. Is the capital of hell. I think being a student of English literature, that advantage I have. In Hindu mythology, if you'll find the fight, the battle between Asuras and the Devas, and then there's the churning of the ocean in search of the nectar, the Amrita, immortality. But actually, it released lethal poison, halahal. And when only the Shiva came to the rescue, he drank that, and he became sort of Nilkantha doing that. So what I thought is this: what Reserve Bank of India had done in 2015 by launching AQR Asset Quality Review, which is sort of manthan, and it brought out instead of Amrita, the nectar for immortality for Indian banks, it actually brought out the poison, lethal poison, halahal. So the key question is, who will drink that halahal? In a sense, here, who will the government be ready in terms of giving the more capital to the banks, because the banks have become so weak, and because they do not have the capital, they have the shortcut way of lending, the so-called zombie lending, and they kept on evergreening their loan book, and the real entities, the borrowers who were looking for money, they were not getting it. And of course, Reserve Bank of India periodically coming out with the restructuring of loans, etc. So, are we going the Japanese way? I mean, if you look at the way Indian banking sector have, because the key reason is, and the large part of it, the banking sector is owned by the government, which is again pretty unique. There are not too many markets where you find so much of government-owned banking. And what the bankers have done, they kept on shifting the asset classes, from infrastructure to steel to power to telecom. And if we go this way, someday there will be nobody to give the money. It's only the government, and that's the ultimate fiscal dominance and the debt stagnation. So somebody needs to drink the halahal and bring stability to the system. Is the government capable of doing that? Is the consolidation the solution, or should the government be liberal in the recap? Or should be the other way, allowing corporate entities to get into banking, privatization of the banks, etc., etc. So I was trying to get the answer, and Pandemonium in that context. Typically, when we talk about Pandemonium, it's a very short-lived episode, and which talks about upheaval and some kind of ruckus and noise. Often you get media headlines that Pandemonium in Lok Sabha, Pandemonium in certain particular locality or in a football stadium, something like that. But here I thought Pandemonium has happened in the entire banking system, and I wanted to catch that. And even if you don't ask me, if you permit me, and do cut me short if you see I'm exceeding my time limit. It's on exactly, I think, 15th October 2019. It's at the Joan. It's Jerome L. Green Hall at Columbia University, where our Finance Minister Nirmala Sitharaman was talking about Indian economy and how to reach the dream of 5 trillion economy. And then from the audience, somebody asked her referring to a lecture given by Dr. Rajan at Brown University. And here he said that, as Dr. Rajan said, that I think Indian government is too centralized leadership. It doesn't have the vision to achieve the economic growth in a consistent way. That's the question our finance minister was asked, and what was her opinion on that, on Rajan's comment. And then she said that she respects Rajan a lot as a governor, but she said that it's Dr. Rajan and Dr. Manmohan Singh, both of them actually responsible for the worst phase of Indian banking, particularly for the public sector banks. So that actually provoked me to think, who is responsible for this? Is it Dr. Rangarajan, because in the 90s he demolished development financial institutions and our banks became universal banks, but they don't have the expertise for working capital loans. For project financing, they are only capable of giving working capital loans. Is that the thing, or is it Dr. Subbarao? Post Lehman, the ultra loose monetary policy, is that the responsible thing, or is it Dr. Reddy's regime between 2006 and 8 when inflation was low, but bank credit was growing 30% odd plus, and economic growth was 9% plus, more than 3 times the bank credit growing? The irrational exuberance, the so-called irrational exuberance, did it show the seeds, or is it Dr. Rajan's time when the AQR happened and Reserve Bank of India suddenly became very aggressive in cleaning up the mess? So that was my question, and the entire book is such of an answer of that. And instead of getting into lots of data and all, and I thought, let me try to weave a story, a tale. I mean, call it Shakespearean tale, which Mr. Uday Kotak said, very kind of him to find this way, or call it a thriller. But I wanted to have this answer. So, and that has taken me to a series of things, to bank fraud, the misgovernance in public sector banking, its consolidation, the panacea, the role of the government, insolvency code, etc., etc. So the book is, it's beyond banking and finance. Its book is the story of liberalized India from early 90s till today. Yeah, I end here.
Thanks, Tamal. I think that's a great overview. And after Dr. Subbarao's sort of opening remarks, this certainly sets the context. I want to now request our panelists, starting with Mr. Kotak, for his sort of initial remarks about the book, as well as what you and Dr. Subbarao have very sort of on the surface level mentioned, in terms of the economic backdrop, in terms of what the banking industry has gone through, and probably a little bit of what the future holds for us. Mr. Uday Kotak, sir, look forward to your remarks.
Thank you very much. And first of all, compliments to Tamal for with one new book on the pandemonium in banking sector at a time when it's in full cry. So it's great to have this book. And Tamal, and for the audiences, one of the aspects about Tamal is ability and knowledge of going into the depth of banking, having various nuances with his deep connections with bankers, practitioners, policymakers, media across the board, and investors, of course. Therefore, Tamal is able to weave together a wonderful insight into number of nuances of the Indian financial sector like no other journalist that I have known. And his ability to get to the core is also quite amazing. And what I saw is the advantage which Tamal has compared to any other practitioner or a policymaker is the ability and the flexibility to speak his mind, which is what he has done in this book. And the way Tamal has explained that if you look at across the Indian financial sector, public sector bank, and the challenges we faced in the case of Nirav Modi and Punjab National Bank. So, or whether it is private sector banks, and in the case of Yes, it is cooperative banks and the challenges we have faced in the case of PMC Bank, or whether it is NBFCs and challenges we have faced in case of ILNFS, or whether it is housing finance companies and the challenges we have faced in the case of DHFL. Therefore, each aspect of these situations, and in a sense, pointed out that the challenges are widespread. They are not necessarily only with reference to one segment of the financial sector, but pretty broad-based in terms of how we need to think about the future of the financial sector. And that is extremely important. What I think we really need to be thinking about for the future is what are the key causes for this and what are the solutions. And here I must take this opportunity, Tamal, to also mention the unique situation, the union that we found out in the case of Yes Bank, which is a public-private partnership in terms of new capital. I thought that was unique and out of the box. In the case of some of the other earlier cases, for whatever reason, between the government and the public institutions, say in the case of ILNFS, the decision was not to put in new, while in the Yes Bank, the decision put in new equity capital. So the important point is, number one, how do we proactively ensure that the problems do not happen, whether it's a cooperative bank, a private sector bank, a public sector bank, an NBFC, or a housing finance company. And at the same time, should problems happen, how can we act and react at great speed to solve the situation? I also like the chapters and the writing, which you have also given some ideas on what are the changes which may be needed even in the regulatory framework, and you mentioned about that. And I'm sure policymakers, regulators, and practitioners will read different aspects of the book and draw the right messages, some of it which can be converted into policy and practice. So I'm delighted to be here. Tamal. Thank you.
Thank you. Thank you, Mr. Kotak. Mr. Rajnish Kumar will request you to sort of give your opening remarks on the book and the subject.
So first, I will admit that I have not gone through the entire book, but at least up to page 96, which covers the NPA part, warrant NPA, that I have read. Definitely, Tamal's style of writing and his weekly columns, they all are always very, very balanced in my view. And about the title of the book, what I thought that the word banking could be removed. Why could it not be titled as the Great Indian Tragedy? Why banking only? It is a tragedy that today, after 77 or how many 75, 77 years of independence, we have to compare that our per capita income, whether it is more than Bangladesh or less than Bangladesh. So to me, it is a Great Indian tragedy and not the Great Indian banking tragedy alone. So that is the first thing. Second, honestly, by reading up to page 96, what I believe is that Tamal is a little bit harsh on the bankers. He could have been a little bit more charitable to the bankers. Bankers also work in an ecosystem. Is our ecosystem working efficiently? And it is the bankers alone who are not working efficiently. In hindsight, you can say so many things. But were we not into a system where the country is capital starved, number one? So for all the development work in the country, the responsibility falls on the shoulders of the banks. We have to understand. The country, the promoters, there is a lot of deficiency. And today what we see, the consequences of what has happened, that in today we speak about that bankers have become risk averse and lending is not happening. So is it And this question I have raised always, that is it because of lack of equity or lack of availability of debt? So to me, it is the availability of lack of equity. And what was happening in the past, a part of the debt was being rotated or recycled as equity, and the investment was happening. And the biggest problem was that bankers were pricing their risk inappropriately. And if the part of the money was going towards equity, but on the equity, the return was being made promoters when it was good times, and all the losses were being borne by the bank. Also, till AQR happened, we were in a mindset, and this mindset didn't come in one day. The mindset was to rehabilitate. The mindset was never, which is an approach. You can call it an American approach, you can call it an European approach to banking, where at the first sign of trouble you run away. That was not the approach in India. And that is where we had sort of not a very efficient system, very inefficient system, I would call BFR, DRT. So if the legal system is such where there is no way that you can recover your money, until 2016, that was the state of affairs. So how do you blame the bankers that they were indulging into restructuring and straight away not pulling the plug? If you pull the plug, what do you do thereafter? Today, at least, of course, after the introduction of IBC, there is a remedy available which can be more efficient. That's not, but it is at least more efficient than what was available. So the limited point I am making is, and then we have a system where the governments don't pay, whether they are central government, where they are discoms, where they are the state government, they are quarreling with the contractors, the service providers, and don't pay. And you have a 90-day norm for recognizing an NPA. So is there not an incongruence in what is the payment culture in the country, and what is what are the norms around recognition of NPAs? So it is the entire ecosystem, and coupled with, of course, I must admit that we were in the regime of excess liquidity and LDD. LDD is lax due diligence. And now, when the banks, learning from their experience and at a very costly experience, they have moved to EDD, enhanced due diligence. And when they do enhanced due diligence, you cry that banks have become risk averse. So I think a little bit more charitable view about the bankers, Tamal. But on the whole, I'm sure that the first 96 pages, I could not, as the other speakers have mentioned, that 96 pages I read in one go, and that's what is going to happen with the rest of the chapters. And for rest of the chapters, I will reserve my comments.
Thank you, Mr. Kumar. I think some very good views on both the content as well as the way he has written the book. And I'm sure once we get into the rest of the panel, we'll have some more discussion around what we could have done differently in terms of treating the bankers. So over to Dr. Veera Acharya, sir, for your opening views on the book.
Thank you so much, everyone. A very good evening to everyone in India. And as the health curve is subsiding, I hope that you and all your families are continuing to remain safe and well. I thank Tamal and Roli Books for giving me the opportunity to give my quick views on the book. As Mr. Rajnish Kumar said, I haven't read the book fully yet. But sometimes when a book arrives, I have a tendency to go right to the end of the book to see how the tragedy ends. And in my case, it was particularly a good choice because I'm somewhat quantitative by my training. I like to look at banking through balance sheets and graphs. And there's a wonderful way close to the end of the book, not the very end. It's called Part 6, Charting the Ills. And there are 16 graphs there. And I'm going to actually describe in one or two sentences each of these 16 graphs because I think that helps understand why the choice of the book's title, Pandemonium, may actually be quite right, and why this is indeed both a great Indian banking tragedy, and I agree with Mr. Rajnish Kumar, it is actually an Indian tragedy. So chart 1 talks about the fact that recapitalization of public sector banks has been close to 4 trillion rupees since 2007-2008. It actually covers a longer period, but most of it is since the global financial crisis. There's also an estimate in the book of the opportunity cost of this money. That's around 2.5 to 3.5 trillion rupees based on how you estimate it. So basically, we have thrown $100 billion at the public sector banking system in India over the last 10, 12 years. And I think this is very valuable money that we could have used in a situation like the COVID to provide relief and repair efforts to the economy. Chart 2 talks about how among the G20 nations, Indian banking sector bad loans are among the highest. This is not a race one wants to win. We are next to Russia in 2019, and based on the available projections, we are going to be the highest in 2020. I have seen this firsthand in presentations of the IMF at the IMF G20 meetings in Washington, D.C. Believe me, it didn't feel great to be in that room when India was being shown as having one of the highest NPA ratios in the whole world. Third, our NPA ratios are not coming down. They have the pattern of mountains, as chart 3 suggests. And in fact, the mountain is still close to its peak. The net non-performing assets for Indian banking were still at 8.5% in 2019 to 20. Fourth is a very important chart. It shows how regulatory forbearance has worked in India. In my view, whether we do asset quality recognition or not, the provisioning for bad loans in India is so slow and so delayed. And I differ on this with Mr. Rajnish Kumar that the way we provision has nothing to do with the rest of the system. It is just a regulatory choice. We have just chosen that banks will not provide for the bad loans in a timely manner. This has nothing to do with when the recovery will happen. We just don't like to account. We don't like to be earnest about our banking sector balance sheets. And what this chart 4 shows is that the recognition of bad loans in India is delayed by at least 4 to 5 years from the time the losses actually happen. Then the chart 5 is about the bad, and the ugly. These are the 7 banks that actually have losses or non-performing assets which are in the 15% to 28% range. These are just unbelievably high numbers, okay? There's a bank, IDBI, I like to think of it as I Did Bad for India Bank. There's a Lakshmi Vilas Bank, maybe it's Lakshmi Khalas Bank, the money, I don't know where it goes. And then there are banks whose names shouldn't have been what they are. Maybe Yes Bank should have been called a No Bank. There's one bank which is not there, but perhaps it should be there. I think the Dena Bank should have been called a Lena Bank so that it collects some loans rather than just gives loans. And, you know, that's the bad, and ugly combination out there. Sixth graph talks about how advances of Indian banks significantly lag deposits, especially in the public sector banking system. Now, this is a sign of undercapitalization. When you're getting deposits, but you can't lend them, it means you don't have the capital to lend. You can't bear risks. And I think, to me, this has been a fundamental problem, besides the fear of, the 3 C's in India and the risk aversion that might hit at times. What's a permanent across in the Indian banking system is that public sector banks are always catching up on capital rather than being positioned by the owner as being well capitalized to lend. Chart 7 then says that the write-offs are now catching up because, even if we recognize loans with delay of 4-5 years, finally we are doing it. And just in 2018, we have a 2.5 trillion. So our mountain of NPAs may have happened 5-6 years back. The write-off mountain is actually happening now. And then chart 8 is also a very important point to understand. And in fact, I would say that while Tamal has been hard on bankers, he has probably been too hard on private sector bankers, in my view. Because when you look at the macro of India's banking, in 2019, public sector banks held 61% of advances, but they created 78% NPAs. So while the specific characters and poster children from private sector banking have made more to the headlines, I would say that as a system, the private sector banking has served India far better than public sector banks have. And so I tend to think that that is where the real problem of India lies. It's in public sector banking. Every private sector banking system in the world has problems. There are bankers who go rogue. But that system has creative destruction and feedback. There are fixes to it. As of now, there has been no fix to our public sector banking system, at least in the last 3 decades. Chart 9 talks about privatization by stealth, which is that private banks are now catching up in a massive way with the market share of the public banks. Their market to book ratios are very high. Their credit growth is very high. And it's a sign that there is lack of capital in a part of the banking system, which is public sector banking, which means that as long as you bank reasonably well in the private banking system, you can make a killing in India, in my view. And so it is extraordinary. I agree with Tamal that some private banks actually have not done well, maybe because there is enough money for their needs, but not for their greed, as Gandhiji put it. Chart 10 then talks about how incremental advances by private banks are now 80 to 120% in the last 3 years of the aggregate numbers. Public sector banks are mainly buying government bonds. They are not making much advance because they are not well capitalized. And this reflects now increasingly in their incremental deposits, because if you keep buying government bonds, you can't make a lot of money. You can't even serve your depositors very well. My driver used to refuse to bank with the public sector bank that he was with because he wasn't getting good quality services in the branch next to our place. And so the incremental deposits by private banks have now fallen to 80, incremental deposits by private banks have risen to 80% share in 2019 from less than 20% in 2009. This in chart 12 reflects in incremental assets by private banks, which are now 90% share of the banking system, again, from being less than 20% in 2009. So basically, we have used taxpayer money to throw money into the bad balance sheets of the public sector banks. It's a massive bad bank, in my view, collectively, this balance sheet. And every time I have looked at it, I reach no other conclusion rather than saying that we are basically running a massive bad bank and continuing to operate with it rather than running it off as quickly as possible. And then the last 4 graphs come to bigger issues beyond just these balance sheet stats. Chart 13 shows that there has been fraud just in last year, 2019 to 20, of close to 2 lakh crores. Means someone is handling all these funds.
Sorry to interrupt you. Dr.
We need to wrap up, right?
Yeah.
Yeah. Let me just walk through the last 4 graphs and then I'll wrap up. That the frauds have been close to 2 lakh crores. So the money that is being injected into the system is being siphoned off. Chart 14 talks about the fact that ills have reached the shadow banking. Its growth has slowed down as well. Chart 15 talks about that our credit ratings in many parts seem to be a sham. Many companies are dropping off like a cliff from AAA rating to completely default status. So that part of the credit discipline mechanism is also not doing very well. And one would hope that at least one would put management in time in place to run this banking system. But our public sector banks very often run without a CEO, often for close to 3/4 or most part of a year. So let me conclude. These charts, just in themselves, just these 16 pages, raise deep questions about India's banking. Has India let down the banking system, or is it the other way around? Who has killed Indian banking? We all know the answers. 4 governors, Dr. Rangarajan, Dr. Reddy, Dr. Subbarao, Dr. Raghuram Rajan have opined with significant overlap in their views on what needs to be done. This was already said in Narsimham Committee in the 90s. It was said in the PJ Nayak Committee in 2014. But the question is, does anyone care? Maybe in India, we don't care about these things. We are practical. We are exceptional. Sab chalta hai. Does the government care? Does the central bank care? Do the corporates care? Does the depositor care? Does the Aam Aadmi care? My observation is that no one seems to care because the entire social cost is being equalized through the taxpayer money. I think the real tragedy is for the children and the youth of our country who don't have as bright a future as we could provide them. So thank you, Tamal, for reminding me of this tragedy through your excellent writing. You have provided, in my view, an invaluable service to the country by writing this book, not just as a banking correspondent, but as an author of so many important books, but laying out so many questions that should really keep everyone in Indian banking, Indian policy, Indian government up at night. I think they should not be able to sleep if these questions are being asked in a book. So more power to you and your tribe, Tamal. I hope it has the impact that the book deserves. Thank you.
Thank you, Dr. Acharya. I think those were some really, really insightful thoughts. And clearly, just using those 16 charts, you have pretty much said a large part of the story that Tamal has been, devoting the entire book to. Fortunately, now we also have Dr. Subbarao, who's been able to log back in. Sir, if we can have, some remarks from you on why do you think, again, Pandemonium, the book and the sort of the concept, why is it a good thing, and what good are you seeing coming out of it?
He's on mute, Kumar.
Yeah, Dr. Subbarao, you're switched off. Okay, now it's on.
Okay. I'm back on.
Yes.
Okay. Yeah, thank you for bringing me back in. If you recall, I was talking about 3 important reasons why I find Pandemonium to be a commendable read. The first reason is because Tamal gave you a 360-degree perspective on every issue. I covered that already. The second reason I found Pandemonium to be a commendable read is because Tamal tells a dispassionate story without taking a position. He doesn't push an opinion. He doesn't push a point of view. He gives all the arguments. Tamal talks about this movie, Rashomon, the Japanese famous 1950 movie by Akira Kurosawa, Rashomon. The plot is about a murdered man and the rape of his wife. It's about the intensive examination of truth. 4 different people give 4 different versions of what happened. What's the truth? So there's nothing original about this sort of a plot. We've had this in many books, in many movies. What's unique about Rashomon, though, is that Kurosawa leaves the plot open-ended. Does not tell you what the actual story is. So Tamal follows the same approach. He gives you all the arguments, all the views, all the analysis, but lets the reader take her own view. Let me illustrate this with the issue of bad loans that he talks about. Why did bad loans originate? When did they originate? How did they originate? These are questions that everybody is asking. And they're questions that Tamal addresses in his book. The common belief, popular belief, is that bad loans are all a consequence of crony capitalism. Government pressuring public sector banks to lend to favored corporates in return for pecuniary or political kickbacks. There must have been some crony capitalism. But to believe that the entire bad loan problem is a consequence of crony capitalism is misleading from a diagnostic perspective. There were many other reasons. I think it's good to recount some of the reasons very quickly. One of the important reasons is all the restructuring done in the months and years after the global financial crisis. The message going out from the RBI at that time was to restructure the loans, restructure illiquid loans, much like what the RBI is doing today, trying to restructure illiquid loans. But it's possible that in that process, some insolvent loans might as well have been restructured. So it's important to understand that I was governor in RBI at that time, and looking to believe that there was some truth to this view. The third reason is irrational exuberance. Throw your mind back to the years before the global financial crisis, 2005, 2006, 2007, 2008. We had the India growth story unfolding. An extraordinary investment boom, fueled by an extraordinary credit boom. Those were heady days. As they say, bad loans are sown in good times. So investors were making investments, making demand on the assumption, on the understanding, misguided as it now looks, that good times will roll on forever. With the benefit of hindsight, we now know that that was a miscalculation. And much of this investment went into infrastructure. Infrastructure was an uncharted territory, both for investors making the investment and for banks lending to them. And in the learning process, a lot of misjudgments were made. On top of all this, there were the Supreme Court orders, cancelling government's allocation of wireless spectrum, of coal blocks, of restraining mining exports, which all added to delay and uncertainty. And banks did not have an effective mechanism for restructuring or recovering loans on the threat of stripping corporates of their assets. And adding to this cocktail was the policy paralysis in the government because of the allegations of corruption and all the scandals. So the sum and substance is that the bad loan problem that we've been going through for the last 5-6 years is a consequence of several reasons. And Tamal gives all these reasons, all the arguments, all the views, but lets the reader take a view herself. So to ask people today, was the cause for the bad loan problem? Different people give different versions. The 4 governors that Tamal interviewed, including me, have different takes about when and how bad loans originated. So Tamal takes this Rashomon approach of laying out the arguments and letting the reader take their own view. And that's the second reason I commend this book. The third reason I commend Pandemonium is because Tamal is a remarkable storyteller. As Uday Kotak in his endorsement of the book, the great Indian tragedy reads like a Shakespearean tragedy on Indian banking. Whether Tamal is writing about the collapse of our bustling private banks, the erosion in our once glorified NBFCs, the fall from grace of our once much adulated bank CEOs, the F word. Yes, the F word in Indian banking, he tells gripping stories. So those are the 3 reasons I've found Pandemonium to be a commendable read. First, you get a 360-degree perspective. Second, from that 360-degree perspective, you're able to make an informed and independent judgment. And third, what's more, you get to do all this even as you're reading a very interesting book, which in parts reads like a crime thriller. No matter how well a book is written, no matter how outstanding it is, you can have quibbles, and I have some. One quibble I want to cite. This is from a domain that I'm slightly familiar with. The role and responsibility of the Reserve Bank of India as the regulator and supervisor of the banking system. Tamal calls into question RBI's role. He asks with characteristic forthrightness if RBI fell short in its responsibility as a regulator. In his own words, he says, does RBI, like the emperor, need words? That's a question infinitely worth asking. It's a question that I must be asking as a past governor, because much of the bad loan problem can be traced back to my time. Broadly, it's a question that everybody must be asking. But my quibble is this. As much as Tamal has talked about all the negatives, he's not talked about any positives at all. Take, for example, the bubble in the NBFC sector. I believe the RBI under Governor Patel first, and then under Governor Das, acted with extremely alacrity and haste to defuse the bubble and then to prevent the bubble from snowballing into a crisis. So I thought Tamal should have spoken about some of the positives. But quibbles apart, I believe Pandemonium is a remarkable story told by a remarkable storyteller. Everyone, government officials, RBI staff, commercial banks, investment agencies, financial sector participants, regulators, teachers and students, intelligent public, all of them will profit from reading this. And one final thought before I finish. I do hope soon enough there will be an opportunity, there will be an occasion for Tamal to write a sequel. And I have a title for the sequel. The title is Celebration, the Great Indian Banking Turnaround. Celebration, the Great Indian Banking Turnaround. Thank you very much.
Thank you, sir. That is on that optimistic note. I think that is a turnaround the entire nation and certainly everybody on this panel is looking forward to. Thank you for those words. We don't have too much time, so I'm going to just open up the panel with the first question, and I'm seeing some comments on the feed as well. That whilst banking is about numbers and balance sheets and money, it is ultimately about people, right? The bankers, the regulators, and whilst we invest in technology and systems, what is going wrong? When banks or NBFCs are being given licenses, they are fit and proper at that time. Then suddenly what happens? Why is it that the most celebrated bankers, whether it is at the private banks that Tamal has mentioned or the public sector system, why is it that people are going either rogue or the system is falling apart? What is going on? And I would request each of the panelists' views on that aspect. Mr. Kotak, would you like to go first?
No, I think for me, the heart of banking is about trust. And, as long as every banker believes that trust is at the core of what you have to be, I think it answers the question. And I frankly feel that bankers need three human qualities, which are prudence, simplicity, and humility. And once the challenge for a banker in general is that you're managing so much money, which is money, that it normally has its effect on people. And therefore, I always say, especially after I mentioned this first time at the World Economic Forum in 2009, that bankers are not masters of the universe. Bankers are in the business of serving people with other people's money. And as long as we keep the principle that we are managing other people's money, we have to take care of it even more than we would take care of our own. Only then can you build sustainably good banking. That's what I believe.
No, that's a very fine view, sir. And Mr. Kumar, what do you feel went wrong? Or what has been consistently going wrong again and again?
No, I fully agree with Uday that banking is a very different type of business in the sense that we are the trustees and we are acting in fiduciary capacity. It is the other people money which bankers deploy, right? And what I also have observed that bankers should avoid being entrepreneurs. I always used to have this conversation with the corporate borrowers, entrepreneurs. We act as a bulwark against taking the risk. They would always come up with a lot of ideas, a lot of risk-taking capability. I always used to tell them that if I had so much risk-taking capability, then I would be sitting on the other side of the table. So by risk management becomes so important in the banks is because you are playing with other people's money. Over a period of time, the desire to generate higher returns on equity That is more to do with the private sector banks. So some of the disaster on the banking system has come from the desire to generate higher returns, because the bonuses and the incentive of the CEOs or the people who matter, they were linked to the performance. So for banking, I think it's very different than other businesses, and that is where then regulators stepped in after the crisis of 2008. But here again, like in India, what I find that for if a problem arises, so I am not responsible, everybody else is. So if 2008, RBI would be ready to accept all the accolades because they came out well. But when it comes this crisis, so RBI is not responsible. It is only the bankers who are responsible. So this is where, like, I think if there is something wrong with the banking system, there is something wrong with the bankers themselves that I have to admit. But at the same time, the rest of the ecosystem cannot escape the responsibility.
True. So you believe there's also an element of, the wrong kind of linkages between rewards and performance, or the wrong kind of performance was being rewarded in the wrong manner, right?
Yes, but that is true only for
Absolutely.
Private sector banks, and for the public sector banks, it is completely reverse. So whether you perform well or don't perform, your compensation remains the same, and as was mentioned, your tenure remains the same. Nobody is thrown out of the job. So whether you perform or not perform, the treatment given to you is the same. So that is the bane of the public sector banking. And private sector banking, excessive greed has been the bane. But whatever has happened to the Indian banking system, one point which is coming again and again, it is private banker is not superior to public sector banking or vice versa. And the day when the private sector banks goes to the places like Gunji or Saya or the upper reaches of Himalayas, then it would be a valid comparison. Private sector banking in India and public sector, you are comparing an apple with an orange. It's not a valid comparison at all.
Sure. Dr. Acharya, now, your view as a former central banker, as the regulator.
Yeah, I think my take is it's not about individuals at all. Of course, people are involved at the end of the day, and I fully agree with both Mr. Kotak and Mr. Rajnish Kumar that there are differences between public and private banks, and you need the humane qualities on the ground. I think it was very, very well put by Dr. Kotak. But I think at the end of the day, it's about institutions. You can't have that a system has failed collectively for 3 decades in a row, and it's about a few individuals here and there. And therefore, my approach has never been to focus on specific individuals. Of course, they are very important to understanding why sometimes things go wrong. I think we don't have the right combination of governance in place. We don't have governance in place for public sector banks. The government as the owner has failed. I think it has not empowered the boards to run the public sector banks well. And there is no discipline on the management or through the shareholders. In case of private banks, we have the backlash of the markets. But for my own standards, based on what I see around the globe, I think our regulatory and supervisory standards are still short of what the global standards are. And it's partly because we are always catching up with losses ex post, rather than actually having smooth dealing with the problems through timely recognition of loans, provisioning of loans, giving bankers incentives to actually recover on the loans, and so on. So I think at the end of the day, we have not come out clean and accepted that we have an institutional problem. We don't have the right governance mechanisms in place. Some of them are weak in private banks. And I think that's the regulatory mechanism. I don't think it's up to scratch as far as global standards are concerned. And in case of public sector banks, on top of that, we have the problem that, the ownership is such that the internal governance at these institutions is not great as well. Now, as Mr. Kotak put, you are managing tons and tons of money of other people with relatively little skin in the game at times. If you don't have good governance working from your owner, from the external shareholders, from the regulators, collectively keeping the ship on its journey in a good way, you'll have more accidents than in other parts of the world. So I think we have to accept that institutionally we are short of global standards. We have missed an opportunity after the 2009-12 NPA crisis to get our acts together. Even now, there is a concern that what Dr. Rajan and Dr. Urjit Patel tried to do was a mistake. India is not ready for it. And it really just baffles me. I think that, if you see the charts that Tamal Bandyopadhyay has put out in his book, and to think that the central bank efforts to clean up and institutionally lift the quality of regulation were a mistake, to me, that is the tragedy. When I read Indian newspapers, when I see analysts talking about attributing the current slowdown to these governors, I feel really saddened that India doesn't actually recognize the good that some people have tried to do to put it on a better path. And we just keep looking for short quarterly annual gains rather than looking for building a great country for next 30 years. So I think we are institutionally weak. That's my point. Yeah.
Okay. Mr. Kotak, you've obviously built a great bank and you've been in the business for a really long time. On one hand, the book Pandemonium is talking about all the ills in the banking system, with the NPAs, and like Dr. Acharya spoke about the lack of governance or the failure of governance. Where do you see us in the current situation, given the fact that you built a great bank? There are obviously some great success stories within the Indian banking system, both public sector and private. And where do you see the road ahead going forward?
Kumar, my belief is India has a great ability to disappoint both the optimists and the pessimists. And having said that, I would say that despite everything, I still vote in favor of the optimist, because I do believe that India gets to the right thing after exploring all other options. And India is at that cutting edge point. I think we are in a very favorable macro position today. India's overall external account is in an excellent position. Yes, COVID has given us a significant hit to short-term growth. But if India does the things right, if we are able to get the balance between the amount of money we need to spend for growth versus the discipline on the fiscal side, I am actually of the belief that there are not too many places in the world which kind of opportunity India has. And therefore, despite the fact that India disappoints both, I will be in the camp of the optimist for India and Indian financial sector. And I share with Dr. Subbarao's sentiment that, Tamal, your next book should be The Great Indian Banking Turnaround. And I hope that happens in the next 3 to 4 years.
Great. Mr. Rajnish Kumar, sir, do you share that same optimism? I know I do. As an entrepreneur, I share the same optimism as Mr. Kotak. What do you feel is the path ahead?
No, this world thrives on optimism. You cannot thrive if you are pessimistic. And it is not that the things cannot be fixed. They can be fixed. And the trend which I am witnessing, particularly, which gives me a lot of hope about the banking, is the adoption of technology by the banks. And whatever area we take, whether it is the loan origination, I'm not talking about the large corporate loans or infrastructure funding, but otherwise, in terms of whether it is loan origination, whether it is the risk management, whether it is prevention of frauds, technology is becoming all pervasive, and the banking system is becoming more and more efficient. Some of the charts if we draw today about, say, the cost to income ratio. So the cost to income ratio for many banks has come down to as low as 30%. How it has happened? It has happened through adoption of technology. So the optimism about the country or for that matter, for the banking system. I don't have much hope that there will be any dramatic change as far as the corporate governance is concerned in the public sector banks till such time the ownership of the government remains. So that is a given. So don't expect anything. But in terms of the other trends about the way competition is happening in the market, the fintechs, the startups who come up with very innovative solutions, the desire to adopt technology, even the State Bank of India, we are government owned, but today in terms of technology leadership, the State Bank is not lagging behind. And that is the hope for India, and that is the hope for the banking system in the country. And many public services, I'm seeing that the technology is becoming a great enabler, and the reach of the services to the common citizens, all that is opening. So there is, like, we need not be pessimistic that everything is not correct. But if we are having hopes that the governance will improve and the ownership will continue with the government, I don't think we are believing too much there.
Sure. You know, we've already run over, but I want to just ask one final question to each of the panelists on where do you see the Indian economy, and in the context of, you know, this whole discussion about fintech really becoming a large play within the Indian banking scenario, new corporate banks or new corporates being given, you know, entry into banking, and, you know, the post-COVID economy. So just one minute, because we've really run over. So we could start with Dr. Acharya, if you will. Just 1 minute on these topics.
Yes, I'll time myself this time. I tend to agree. I think technology is the way out. I see a lot of promise in what is being developed by the India Stack and the OCEN, Open Credit Enablement Network. I think finance is getting embedded through the sharing economy and the e-commerce platforms, as well as GSTN and the government e-marketplace, etc. I think that can enable expansion of credit to MSMEs and maybe small entrepreneurs. I think that seems a very promising way out. I think if we can grow our credit to GDP ratio from 55 to 60% to higher numbers, with prudence, to use Dr. Kotak's word, I think it would be fantastic. And I think technology could pave the way for this. So even though I might have sounded very harsh and negative, I'm still optimistic that technology could substitute for some of our institutional incompetence.
Mr. Kotak, if you will.
No, Kumar, I will give a perspective through a quote. The quote about the challenge before humanity is to balance discipline needed for survival with the chaos needed for progress. And India, if we have to grow, we've got a bit of both. We've got chaos all around us, and we have some aspects of discipline which are beginning to come in. If we get the equilibrium between discipline and chaos, if we get the equilibrium between the need to dramatically increase our focus on things like healthcare, education, sustainability, and at the same keep the animal spirits going, India will come out of this stronger. Finally, COVID has taught us one thing. Discipline is important, but chaos is needed for progress. Therefore, let us not forget the chaos even as we focus on discipline. And getting both together is something which India is naturally good at. Okay? Chaos comes to us because that's how we Indians are. We are like that only. And then if we get some discipline to that, we are like that only. We have a winning combination. Thank you.
I think that's a great sort of perspective and a great way to put it. A final word from Mr. Rajnish, Kumar, and then Tamal.
So I believe that, as I mentioned, that technology, the demographics, and as well as reposition of the global supply chains. So whatever is happening, I think in terms of the growth opportunities, the environment is very conducive. But because we always miss the bus. So I hope that this time we will not miss the bus.
Got it. Let's hope so too. Tamal, you sort of last words on the panel today.
No, it's last word is too grandiose. I don't deserve to talk the last word, but I take this opportunity to thank everybody. Dr. Subbarao is not here, but Dr. Subbarao, Dr. Acharya, Mr. Kumar, and Mr. Kotak for your kind words, for your encouragement. You are too kind to me. So thank you, sir. The fact that Mr. Rajnish Kumar is upset, and so is Dr. Subbarao, I have done a good job. I'm convinced, because when people say that I'm not being fair, and both the sides, both the camps, central banker, governor said that I'm not fair to the RBI, and public sector bankers saying that I'm not fair to the public sector banking. Dr. Acharya is saying that I'm not fair to the private banks. So all constituents saying that I'm unfair. So which means I have been fair. So that I'm convinced. That's one remark. Second is, as an academician, actually Dr. Acharya had got the right thing. Those 16 charts. In fact, as I have been telling everybody, that I'm a storyteller. I am not an academician, and I don't get into all this kind. So I decided to have some sort of charts, and which actually this close to 150,000 words, which can't say. These 16 charts have said that, and Dr. Acharya, sitting in his perch as an academician, has got that. So thank you. I my also intention that. Finally, I accept the proposal, the suggestion from Mr. Uday Kotak and Dr. Subbarao and all, and Dr. Rajnish Kumar, that I should write a story on the turnaround of Indian banking system a few years down the line. We'll be very happy to do, because the industry is kind enough to open up and tell me their stories. I'm only a weaver of storyteller. The stories don't originate from me. And the final is on the title of this, the Pandemonium, Great Indian Banking Tragedy. I think everybody agreed Pandemonium is the right word. Dr. Acharya said, in fact, Mr. Uday Kotak, when he spoke about the chaos and the discipline, is again the manthan. So as I said, that's the original idea of who will bring the nectar. But given a choice, and Rajnish Kumar said, and Dr. Subbarao, I think, probably said that, why Great Indian Banking Tragedy? It should be Indian tragedy. While I agree that this is a larger India story, I don't think it's only meant for the bankers and finance students. It's an Indian economic story. That's what I try to tell. But I given a choice, I would have actually said a great Indian banking comedy. Why I am saying that? You see the disparity between public sector banks, which holds such a big portfolio and such a large portion of the industry, but how much they earn for handling such big balance sheets. Mr. Rajnish Kumar sits in a bungalow which probably have 10, 15, 20 lakh used to sit in a bungalow, the rental, but he can't eat that rent, right? He needs to be paid. He's 1/5 of more than 1/5 of the banking system. Does he get that much of money? I think a much smaller bank gets 5 times more than he gets. So isn't that a comedy? Or for that matter, you go for consolidation. The first experiment, Bank of Baroda, when the MD and CEO leaves, you have a many months gap to get the next CEO. And meanwhile, the bank is run by executive directors who are not originally from Bank of Baroda. They're from different banks. So isn't that a comedy? Or the last instance is this: you ask LIC to pick up the majority stake in IDBI Bank, and we tom-tom it, we have privatized IDBI Bank. So if you look at all these things, given a chance, I would have called this a great Indian banking comedy. Thank you all. Kumar, you can take it over. I've said what I wanted to say. And once again, thank you for everybody for your kind words. It's a great encouragement for me and
Well, thank you everyone for joining us. Dr. Subbarao, Dr. Acharya, Mr. Kotak, Mr. Rajnish, Kumar.
Thank you.
Congratulations, Tamal.
Thank you.
And for everyone, Dr. Acharya has said it, we should just remind everyone that the book is actually available on Amazon. It's available on with our bookstore partner, Crossword Bookstores as well. And please do go out, buy it for my dear friend Tamal. Tamal, all the best. Congratulations.
Thank you. Thank you.
Thank you.
Bye-bye.
Thank you very much.
Thank you.
Thank you. Thank you so much, everyone.
Thank you.
Thank you, sir.
Thank you.
Thank you, Tamal. All the best.
Thank you, sir. Thank you. Thank you,
Thank
Dr.
you.
Acharya. Thank you, Kumar.
Thank you. All the best, Tamal.
Okay, Kumar, we'll talk later. Yeah.